Hello everyone, I'm Alan with Your Market, Your Money. I'm the founder. Okay, we're going to take a look at some Abletrend charts. And we're going to start with the ES, which is the E-mini S&P. And we know that that's the contract we're looking at, because if you see my pointer up here, upper left hand corner, it says ES, that's the E-mini S&P. That is a futures contract that falls under futures. That does not fall under stocks or Forex. Okay, it is May 3rd. It's about 1:35 in the afternoon, which means the market in New York is now closed. Okay, let's take a look at these real quick. I'm not going to try to drag this out too long if I can help it. Okay, well, if you look here where my pointer is, and here's the New York market open at 9:30. That's the timeline right there. That's when the market opens. Best time to trade these contracts is during the New York market when it opens. And you try to get out of your positions at least either a half an hour or hour before it closes. So let's take a look here. Now, as I go along, the boxes that you see here are trade opportunities that I marked. The ovals or the ellipses that you see are the no trade zones. You don't trade, and I'll get into that in a second. Okay, this one here, this is your here's New York market open. Let's take a look here. This signal came in at 6:14, which is about 15 minutes before the market opens. That's okay. That's what we call a little bit of pre-market activity. Now, in this particular trade here, I would have waited to get in on this bar right here. You can see that because I indicated I put some blue pointers here or blue arrows. I like to mark my charts just for notes and reference and all that. Okay, well, anyway, I go by every trader that trades has their own trading style. They have their own trading style, they have their own risk tolerance, and their basically their game plan put together. So I go by what I call I have what I call a 5-bar rule. And let me explain that to you. Here's the original buy signal right here. You see everything's in agreement. Got a big blue dot, blue bar, small blue dot, blue X. So everything's in agreement. So I wait 5 bars, counting the original signal. So you got 1, 2, 3, 4, 5. Here we have a green bar. But if you look at these first 4 bars or 5 bars, it's going sideways. There's no what I call stair steps. So it's going this way. Wait for the next bar, comes down. Next bar comes down. Okay, so we wait till we get right here where it retraces. You got 1, 2, 3, 4, 5. I get in on this bar right here. And the reason for that is because these 5 bars are all blue. And here I have a little bit of a stair step. See that? Like, that's what I call stair steps. So I get in here, enter the trade here, stay in, stay in, stay in. A little bit of a pullback, touches on support, comes back up. This real long bar. You see this real long bar right here? That real long bar usually indicates it's going to pull back a little bit. That's what it did. And if I would have stayed in it, it would have took me all the way to here. So that would have been a break-even trade. But if I was trading this, I would have got out on this bar right here. So I would make a little bit of a profit. If I decided to stay in it, I would. That's pretty much a break-even trade right there. This is a no trade zone. You have red dots. You got blue X's, opposing colors, so you stay out. This trade here, I would not have gotten in it because you count the original signal 1, 2, 3, 4, 5. You have a nice long bar, which means it's probably going to pull back, which it did. Comes up just a little bit and then comes back down. If you would have got into that, if you would have done that trade, you would lose a little bit. Not much, but you lose a little bit of money there on that. So I wouldn't have gotten into that, mainly because I don't like how the bars look and I don't like how they're arranged. Okay, this one here, no trade zone again. Red dots, blue X's, stay out. This one here is a fairly small trade. It's okay. There's nothing wrong with it. You enter here. This is the buy signal. Count 5 bars. 1, 2, 3, 4, 5 here. So by the time you count the 5th bar, you're showing a positive trend. Everything's in agreement. Everything's blue. Everything's in agreement. So you get in, or I get in. Take the trade. You stay in, stay in, stay in, stay in, stay in. Stay in, a little bit of a pullback, stay in, stay in, stay in, stay in, stay in, stay in. And on this third green bar right here, let me mark that. That's where I would have got out right there. Because it's going to pull back a little bit. And I'm going to indicate that by red arrows that I exited the trade. So I entered here, got out here. And that's just a smart move, because if you would have stayed in it, it would have took you all the way to here to where you get stopped out. You'd still be profitable, but you would have lost just a little bit of money, not much, but a little bit. Okay, no trade zone here. You see that? Here's a good trade here. Original buy signal. Count 5 bars. 1, 2, 3, 4, 5. 5th bar is actually here. You get in. Everything's in agreement. Then you get in. And let me take another look at this here. Okay. All right. Yeah, we probably got stopped. It looks like we got a. Yeah, let me look here. No, we're okay. Yeah, we didn't get stopped out on that. That's fine. Anyway, you get in on the 5th bar, pulls back a little bit, bars go green, goes sideways, a little bit of consolidation, starts to go up again. Here it goes. You stay in, stay in, stay in, stay in, stay in, and you exit right here. So from here to here is a good trade. Okay. And on this one, it looks like your stop loss would have gone way down here, but the bars didn't touch that, so we're fine. No trade zone. This one here, I wouldn't have even thought about trading. It's just you gotta. This says you need to buy or go into a buy to buy, but you count 5 bars. 1, 2, 3, 4, 5. And the bars are going the wrong way. They're going down. They're supposed to be going up. And there's more green bars than blue bars. I'd stay out of that one. This one here, no trade zone. This one here, buy signal, count 5 bars. 1, 2, 3, 4, 5. Get in here. Stay in, stay in, stay in, stay in, stay in, stay in. Retraces back to support. Comes back up. And looks like we're out. 1, 2, 3. We would be out. Yeah, we'd be out right here because your stop loss would go right there. So we got stopped out, and there's no use to get back in that trade because the bars are all green. Plus, they're going the wrong way anyway. Okay, no trade zone right there. This one I wouldn't trade. You could have got in right here if you wanted to. I wouldn't have done it because if you would have got in, I would count 5 bars. 1, 2, 3, 4, 5. That put me about right here. Yeah, it's just too far from the signal. Plus, you got a no trade zone. So this one I would stay out of. I wouldn't have got into it. You would have got stopped out right here anyway. No trade zone, stay out. This one here, you could have traded if you wanted to. I probably, well, I don't know. I might have 1, 2, 3, 4, 5. If I got in on that bar and took that trade, it would have retraced, come up. You wouldn't have got stopped out, but it would, well, let's see. Yeah, you wouldn't get stopped out, I don't believe. You could have got out on that long bar right there, maybe. Unless you decided to stay in. But even if you decided to stay in, you'd have to get out probably about right here. That would pretty much be really, actually, that would actually be a break-even trade on that one. So, and market closes. Here's 1 o'clock my time. That would be 4 o'clock New York time. Market is now closed, so no more trading on the ES. You would have made a little bit of money, but you just got to know how to read and interpret the Abletrend chart. And that just comes with time. You're not going to learn it overnight. You're not going to learn it in a week or 2 weeks or whatever. It's really not that hard. Okay, here's the E-mini Nasdaq, indicated by the NQ symbol up here. This is the E-mini Nasdaq. It's a futures contract, and that's how you can tell it's futures, which is NQ right here. Okay, so let's take a look at this. This is a no trade zone here. Don't trade. This one here, you had a trade opportunity. Let's take a look at this. Where's the 5th bar? 1, 2, 3, 4, 5. You could have traded that if you wanted to. There probably wouldn't be anything wrong with it. I don't think I would have, mainly because you have 3 green bars and only 2 blue bars. If those green bars would have been blue, I wouldn't have had a problem with that. But I would, personally, I would probably have stayed out of that. And even if I did trade it, it would probably be a break-even trade anyway, if you look at it. And when I say break-even, this is where you could have got in here. But when I say break-even, you draw. This is where you would actually probably get out. If you rode the trade all the way out, you just draw an imaginary line, and you can see the entry point. So you go from here, just draw a line and go across. It comes about right here, so that's why I say it's a break-even trade. Okay, no trade zone. This one here, yeah, it's a fairly small trade. Here's the buy signal. Count 5 bars. 1, 2, 3, 4, 5. You enter here. This is where I would have got in, right here. So you stay in, 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 stay in. And on this one, the 3rd green bar is right there. And you're out. I would have got out right here, and you'd get out here anyway, but you'd get out right there. That's not bad. That's a nice little trade. And if you notice, what I'm showing you are short-term trades. This one came in at 7:30. You would have got out here, It'd be about 8:12, so it'd be just about an hour and 10 hour and 15-minute trade right there. It's not like the stock market where you're gonna be in for days and months and maybe years. I don't know. Okay, no trade zone here. No trade zone, no trade zone, no trade zone. Anytime you see, like I said, when I mark my charts, if you see like an ellipse or a circle, that's no trade zone. Stay out. Do not trade. Opposing colors. Red dots, blue X's. Red dots. Everything's blue. Same thing over here. It's all red. Blue X's. Stay out. Okay, so you have basically 3 no trade zones in a row here. The no trade zones actually came up with 819, and you came out of that no trade zone at almost 10 o'clock. That's out. What's that? An hour and 50 minutes? Let's just say 2 hours. Just round it off to 2 hours. 2 hours from here to here, you don't trade. That's what Abletrend's telling you. Don't trade. So that's a 2 hour no trading zone, basically is what that is. Okay. So here here's a nice little trade here. Okay, so here's the buy signal. Count 5 bars. 1, 2, 3, 4, 5. That gives me a green bar. Okay. I have more green bars than blue bars. And it's just going sideways. I don't have the stair steps. See the stair steps here? That's what I call them, stair steps. Okay, 1, 2, 3, 4, 5. You got sideways movement. You have a blue bar here, 2 blue bars. Because I saw these green bars, I'm going to wait another couple of bars, and they all turn green. See that? So where would I get in? Probably right here's where I would get in. You can get on this. You can get in on this long bar if you wanted to. You stay in, stay in, stay in, stay in, stay in, stay in, stay in. You get stopped out. Yeah, that's a stop out. You see where I'm putting my pointer? Here's where your stop loss goes on the second row of blue dots. And you just follow it across. Green bar penetrates that line, penetrates your stop loss, closes out your trade, you're out. Okay. And I don't think I would have got back in on that one. Actually, you know what? Let me change this first. Let me just move this over here. Here we go. Yeah. Like I said, I mark my charts. I put boxes and X's and ellipses and everything else on here. And that's for my reference. Well, I mean, you know, it's kind of like doing your homework, I guess. All right, no trade zone. Okay, this one, you could have got in on it, but I wouldn't have, and let me tell you why. Here's the no trade zone right here. Count another 4 bars. 1, 2, 3, 4 bars. You don't have any more X's. Count 5 bars from that. 1, 2, 3, 4, 5. It would have been, let me see. It would have been tempting to get in right there. It would have been tempting to do that, but I wouldn't have, and let me tell you why. You have a no trade zone. Then you have about another 6 or 7 bars. Now you have a trade opportunity. Well, you just got out of this trade zone. But the thing that I look at is, of course, this is no trade zone. Here's your original sell signal. Okay, and if you look at the bars, they're going the wrong way. But from here to here, that's about a half an hour. Yeah, I just don't think I would have done anything with that. Yeah, it would have been tempting to do that, but even if you did get in, it would have gone the other way. It would have gone against you, and you would have got stopped out right there. Actually, you would have got stopped out 3 times, if I'm reading this right. So the trades that I prefer to take are ones like this here. Let's go ahead and mark this since I got it up. Okay, it's 12:25 here, so that would be 3:30 New York time. That's about a half an hour before the market closes. You're still in a no trade zone because you got a red X up here, so you got to wait till this bar closes, or wait till this bar to not get another red X. So if I were trading this 1, 2, 3, 4, 5, I probably would have got in right there. I would have got in right there on this one. Okay, so you get in there, get in, stay 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 in. A little bit of a pullback, you stay in, because you got support here, you got blue dots under here, so you stay in, and you got the blue X's, you stay in, stay in, stay in. And if you would have wrote it all the way out, you get a red dot, and now it's just about the market close. Market closed at let's see, 13, 14, 15. Yeah, market closed about at 4, let's see, 4:30, 1 o'clock. Okay, actually the market, New York time, okay, New York time, like right here, this is where the market closed right here. The New York session closed for today and for the weekend, so, but it's not a bad little trade. That's, that's pretty good. Okay, let's go to one more chart. One more, we're going to look at crude oil, CL. It's crude oil. You know it's crude oil because the contract symbol, CL, there it is. And it's down here also, CL. Where's the market open? The market opens at 9:30 right here. Okay, no trade zone. Look at this. No trade zone from the time the market opens, which is 9:30 up to 16. That's about an hour and 15, an hour and 20 minutes right here, maybe, that you're not going to trade after the market opens on crude. If you're up early enough, you got a little bit of pre-market activity right here, because from here back is pre-market. There's a sell signal, but I'm in a no trade zone. Okay, no more blue X's. could have got in there if you wanted to. If I would have took that trade, I probably would have if I was up at that time, which I probably would have been. And you stay in it, stay in it, stay in it, stay in it, stay in it. It's going to retrace. It's going to come back up. It does not hit your stop loss, which is right here. It's going to come back down, and you're out right here. Now, if I would get in on this trade and I saw this really long bar, I'd be kind of afraid that it's going to pull back on me. It did down here. So I probably would have stayed in this a few more bars and probably got out. And I'm trying to be honest with myself on this. I probably would have got out on that bar right there, take maximum profit. And that's a short trade. That's only 1, 2, 3, 4. That's only about a 5 or 6 minute trade right there. Well, that's a pretty good move. Okay, like I said, no trade zone. Okay, here you would have got up. Here you would have got into this trade. Okay, so no trade zone. No more red X's. Count 5 bars. 1, 2, 3, 4, 5. Put you right here. I would have got in on. I would have traded this because I have 4 blue bars and only 2 green bars. See that? 1, 2, 3, 4. That means it's probably has a pretty good chance it's going to keep going up. Plus I got those little stair steps. See that? It's like stair steps. That's what I call them. You got in here, get in, stay in, stay in, stay in. Here's kind of a long bar. It really depends on your trading style and your risk tolerance. You could have got out there on that long bar if you wanted to, or you could have stayed in it. It's going to pull back on you. It's going to come back and get really close to support. Comes back up, comes back up, comes back up, comes back up. Stay in, and you are out right here. So let's take a look here. Let's see. Got out here. Get in here. You get in here, get out there. Yeah, actually, you know what? Let me take a look here. Okay, I'd probably get out on that third green bar. You see that right there? So you could, depends on your trading style. If you wanted to get out, you could. Depends on how you trade. Everyone has a different trading style and different risk tolerance. I have kind of a low risk tolerance. I don't like to get my money back. I take profit when I see the opportunity. I take it, and then I just look forward to the next trade. So, okay, so we get out here. You get out right here, or you could have got out right here. Well, from here to here is not very much difference at all. If you see that, from here to right there, and that's how you have to look at it. That's a nice little trade. That's not too bad. I'm not going to dwell on that too much. Okay, no trade zone, no trade zone, no trade zone. That's 3 trade zones. There's another one over here. This one here, I wouldn't have traded that. Why not? Well, blue buy signal. Everything's in agreement. Okay, you have blue dot, blue bar, small blue dot, blue X. Everything's in agreement. Well, you're just coming out of this no trade zone. The no trade zone is like right beside it. Count 5 bars. 1, 2, 3, 4, 5. That gives you a green bar here. Another green bar. Blue bar. Long blue bar. Another long blue bar. Another long blue bar, and retraces. Yeah, I just wouldn't have done that. Mainly because, for one, it's too close to the no trade zone. Plus, you don't have any. There's no stair steps going up this way. It's going to your trade's actually going against you. And I don't have 5 blue bars going the other way. So Okay, this one here, sell signal. Sell signal. Yeah, you could have took that if you wanted to. You wouldn't make much. Actually, if you got out on that medium long bar, you could have made a little bit, wouldn't be much. If you rode it all the way out, it'd be a break-even trade pretty much. No trade zone. This one here, break even pretty much. You could have got in it. 1, 2, 3, 4, 5. Yeah, that's probably just a break even trade there. No trade zone. This one, yeah, you could have traded it 1, 2, 3, 4, 5 bars. If I would have traded this, it'd be about not even a 5 or 6 minute trade. You get in here, you get out on this one of these long bars. Your max profit would be down here. That's just that's what we call, actually, that's, if you ever heard of the term scalping, which means traders get in usually either in a few minutes, they're in and out, or even a few seconds. But like I said, it depends on your trading style and your risk tolerance, how much you're willing to risk. Okay, this one here, no trade zone, no trade zone. This one I would not have traded because, for one, it's too close to the no trade zone right here. You do have a valid sell signal. Red dot, red bar, another red small red dot, and a red X. That's a valid signal. But if you do the 5 bar rule, and this is why I came up with my own, this is my own thing with the 5 bar rule. Got 1, 2, 3, 4, 5. Okay, well, these 4 bars are going sideways. They're not going in my favor. This bar is, but I have there's no stair steps here. This is just sideways movement here. Next bar, you get a green bar. It's going to start to retrace, and it just kind of fizzes. Actually, if you would have took that trade, you would have lost. I'm going to guess maybe you might have lost maybe $30, $40 on that. Okay, I'm still getting some activity here. You can see that working. Okay, this one here, let's take a look at it. Oops. Okay, now just for future reference, so everybody knows, I do the boxes. When I put a box up like that, it means that's the trading opportunity that I see. Okay, and of course you can compare with what I'm showing you with what you use. If you have regular charts or whatever you're using, you can compare it with what I'm showing you here. And you do that using the timeline. My timeline down here is on Pacific time, because I'm in Las Vegas. So okay, this one here, let's take a look at it. Okay, sell signal. Everything's in agreement. Everything's red. See that? Red dot, red bar, small red dot, red X. Count 5 bars. 1, 2, 3, 4, 5. I got sideways movement. No stair steps going down. Now I have green bars. I have 1 bar here, 1 bar here. 2 red bars, 2 green bars. A third long bar. Excuse me. Probably would have got in right there. There's where I would have got in. My drawing skills aren't all that great. Okay, well anyway, original sell signal here. Signal comes in at 12:20, or actually 3:20 New York time. Actual entry time is 12:35 my time. About what, 15 minutes? So you enter the trade 15 minutes after you get the sell signal. So you stay in, stay in, stay in, stay in, stay in. You get pulled back, and you do get stopped out right there. There's where your stop loss goes right there. I would have got stopped out. It's now, like I said, depending on your trading style and your risk tolerance and all that other good stuff. If you wanted to get back in, you could have gotten back in, maybe right. You could have gotten in. Tell you, I gotta take a drawing class or something. You could have got in right. You could have got back in there if you wanted to. But if I'm out on that green bar right there, which I would have got stopped out anyway. So I would have made a little profit from here to here, even though this went all the way down. See that? So you could do it. You could actually do this one of 2 ways. You could have got out on this long bar, which usually indicates pullback, and that's what it did. You could have got out on this bar, or you could have got this way and got stopped out. But I wouldn't have gotten back in this trade. You could have, but I wouldn't have. And the reason for that is because you got stopped out here, or you exit here. But if you notice, either from here to here, for me, the way that I trade, this is too far. It's too far from the sell signal. See that? See where my pointer's going? Too far from the sell signal. Okay. So I'd take my money and run, and I wouldn't get back in on that trade. Because if you did get back in that trade, you'd have to get back in over here, and it would have even made it further away from that original sell signal. From here to here. See that? That's if you got back in, and if you did, about 3 minutes later, you'd be out again on this bar maybe. See how long that bar is? See how it kind of pulls back a little bit, but you're out right here. So if you would have got out here, or if you would have got out here, the profit that you would take would probably be It wouldn't be that much difference, really. It would be, but it wouldn't be. So it's just one of those trades that, it really depends on your trading style. Trading style, your experience, your risk tolerance, all that comes into play. Okay, so let's find a 4 o'clock close here. Four o'clock closes right here. This is where the market closes. It says 13:02 down here, but that's my time. So that's 4 o'clock New York time right here. And you can tell the market's now closed. The markets are now closed because see how it just kind of flat lines? You get a great big no trade zone. Yeah, I just wouldn't. Okay, that's pretty much the end of the day there. So let's go back and look at these one more time. Here's the ES, the E-mini S&P, like I said. There's the contract symbol, ES here. And in my workspace it says ES. Okay, let's just zoom out, take a look at it here. This is what I like to do. Kind of gives you a view of the big picture. That's kind of off and on today. You had some fairly good trading advantages or trading opportunities. If you count the boxes, well, 1, 2, 3, 4, 5, 6, 7, 8, if I'm doing that right. And no trade zones, you got 1, 2, 3, 4, 5, 6, 7 no trade zones. And that's for the ES. The NQ, no trade zones, 1, 2, 3, 4, 5, 6, 7. Trading opportunities 1, 2, 3, 4, as opposed to the no trade zone. So you see that? 1, 2, 3, 4, 5, 6 no trade zones, and 1, 2, and 4 trading opportunities. So you had actually more no trade zones than anything else. Crude oil, which you hear about all the time in the market news and everything. If you listen to market news all day like I do, CNBC, or listen to Bloomberg. Okay, how many no trade zones here? 1, 2, 3, 4, 5, 6, 7 no trade zones. How many trading opportunities did we have on here? 1, 2, 3, 4, 5, 6, 7, 8. So you got a few more trade opportunities than you do no trade zones. And this is why I mark my charts for reference, and then I step back and take a look at the big look at the big picture, to look at the overall trend. If you look on the E-mini S&P here, the overall trend on the ES is positive. See that? See how it trends up, trends up, trends up, trends up, comes down just a hair, and then back up. So if you're watching the market news on, Bloomberg or whatever, MSNBC, whatever, and you hear that the S&P 500 is gaining or it's going up, and you can probably pretty much tell this contract is a stock indice. So okay, NQ, same thing with the NQ. You got a long positive trend here. See that? That's the overall trend direction, long term. This one here, crude oil, it's up and down. I guess you could, yeah, it's up and down. Crude oil, contract symbol CL. Crude oil is probably the most talked about commodity on the news, on market news, Bloomberg, whatever. It's right at the top of the list. It's what everyone talks about. You hear about OPEC meetings, and you get commentary from market analysts off of Bloomberg and MSNBC and journalists. So you listen to what they have to say, and then you start looking at your charts and stuff, and you get an idea of what they're talking about if you're looking at the overall trend direction. Because then you got to remember, when you're watching market news and Bloomberg, if that's what you're watching, like what I do, they are focusing on long-term growth and long-term trends. What we focus on here, showing you these charts, is day trading. You're in and out same day. So that's what that is. Well, that's pretty good stuff. It's this will definitely keep you out of the bad trades. But you can compare what I'm showing you with what you're using. Pull up your charts and pull up your charts. Pull up the ES. Pull up your chart. Pull up the ES on your chart on a 1 minute time frame. Make sure that that your timeline's right or in sync with mine. Like you started right here. So if you're on the East Coast, 6:12 my time is going to be 9:12 for you on the East Coast, and then you can just compare with what I'm showing you. And I call that timeline comparison. So let me show you this again, just really slow so you get a good look at it.